A couple of years ago, I was here speaking to Sunil D'Souza about the journey at Tata Consumer Products. The revenues are now closer to $2 billion. Where does the next $1 billion come from? And back here, the same very place, Sunil D'Souza with me. Thank you so much. Always a pleasure speaking with you. And let's start with that itself. I mean, $1 billion added over the last 5 years in your revenue. Where does the next $1 billion come from? And when?
So Mangalam, as a company, we have said we wanted to be a premier food and beverage company and then a total FMCG company. I think we're about 35% of the way there. We've still got a long way to go. The good part is over the past 5 years, I think top line double digit, 13% revenue, 14% EBITDA, 23% net profit. I think it's been a good run for the last 5 years. Going forward also, we're continuing to target an aggressive growth rate, double-digit top line. Again, EBITDA margins, we're extremely aware, saying we're one of the lower this thing. So that will grow far faster than top line. And yeah, I mean, the aim is to double TCPL in double quick time. If we continue at this pace, I think we'll get there.
Okay, so one of the things that you had said also in the past that you were 15 minutes into a 2 hour long movie. How far along have we gone since then?
I would probably be 30, 35 minutes.
30, 35.
Yeah. So we've still got a long way to go.
You've been speaking about decommodifying your business. Since then, you've made a couple of acquisitions. The increase that has come in from your, non-commodity products in sales has also visible, but still there is that element of commodity. If you could give us a number, where does that number stand at right now versus what it was earlier? And what's your target here?
So Mangalam, let me answer it in two different ways, right?
Okay.
If you look at commodity and margin pressure, you're absolutely right. So last quarter, actually, my EBITDA was about flat compared to last year, despite top line growing 17%, which in percentage wise we had gone down. Now that is for two specific reasons. A is tea in India and it's coffee in the US. Now coffee in the US is a global issue. It's not only me.
Yeah.
Right. And we've announced a price increase effective June. So we will be getting back on the US margins quickly. The India margins were tea was a question of supply demand in the last season. And this season, if everything is right, we should be coming back to par very quick. Number two, the way we've constructed our portfolio today is primed both for top line as well as margin expansion. And I'll tell you why. So I broadly, my portfolio is now three different parts.
Yes.
A is a steady India tea, India salt, and the international business, which will grow mid to high single digits and continue to deliver decent gross margins, predictable gross margins. There'll be those one-offs on the tea, salt, etc. from time to time, but broadly predictable. The second piece is a fast-growing, huge TAM opportunity of sampan and ready to drink, right? Per capitas are low, branded penetration is low, the commodity penetration is low, and therefore, sampan is close to double-digit margins. Ready to drink is slightly lower than my base, but very, very fast top line. So that gives me the top line leverage. And then I've got this entire set of slightly lower TAMs, right? Very, very strong brands, very high margins, right? Which is Capital Foods, Soulful, Organic India, these pieces, right? Organic India supplements is a 70% margin, roughly 2x my base. Capital Foods is roughly 50% my base. So these are also fast growing, but relatively lower TAM. So these will add to the margin profile. And as long as the theory of building the distribution system and the costs are mostly baked in.
Yeah.
Right. And therefore, margin expansion at the top will drop to the bottom. That's the whole logic.
So, let's take all of these pieces individually. Let's start with organic and capital foods. Last year, because it was a year of consolidation and, you were trying to fix the inventory, etc., and understand the business itself, you were pretty much at the same level as what it was in FY24. I remember you telling me that, at a business case level, capital foods could actually do 30% margins versus the 24% that when you acquired it. Even organic, you were hoping of a manifold growth out there, largely because of one, its quality of product, and secondly, the distribution mismatch. They were available in 28,000 outlets that time versus yours, which is close to 4.4 million. How much of that has already happened right now? In how many outlets are these products available? And what are the EBITDA margins of these products? What can we expect in the next couple of years?
So Mangalam, we don't count every category EBITDA margins, right? Because then it's a mathematical exercise to allocate costs because it's a common distribution system, common backend system, and therefore we look at gross margins for the category. My manufacturing and sales is a fixed cost item below that, right? So if I look at gross margins, like I said, Capital Foods is 50% accretive to where I am.
Right.
Organic India, the base products are 50%, supplements are 2x of where they are. So highly accretive. Now, it did take us some time because overall we've still grown Capital Foods by about 30% from when we acquired.
Right.
Last quarter was a huge number simply because we are cycling weak numbers of the last year, right? But we do think we can grow it 30% consistently, right? It took us a bit of time, both for Organic India and Capital Foods, because A, understanding the category dynamics, the outlets which mattered for weighted distribution, and the kind of back end stuff that we had to do to make sure that we maintain the margins. We probably took around 4 to 5 months more than we probably thought we will get it in a quarter. It probably took us 5 6 months to understand the base stuff. So roughly half the year. And from then on, it has been an acceleration, right? So in the initial phase, we did expansion on the numeric piece, and then we figured out we're missing out the weighted. So we paused, we said we fix the weighted. Now that we fix the weighted, now you will see an expansion of two things. One is you'll see an expansion of distribution.
Yeah.
And more importantly, you will see a portfolio expansion happening, right?
330 crore was this quarter. 500 crore per quarter run rate happens sometime in the middle of this year or start of.
We should be getting the second half of this year should be peacefully that kind of run rate.
And what about, you increasing the TAM in these? You spoke about soulful, you spoke about organic. I mean, these, apart from what these brands stand for, there's a lot more that they can stand for as well. Are there any thoughts of increasing, the positioning of, expanding the positioning of Organic India and Soulful beyond what they are right now?
So absolutely, Mangalam, the whole theory was that very strong brands with very strong propositions and therefore could leverage into adjacencies very, very quickly. And let me give you some examples, right? Soulful, we've just entered Rusk. Rusk is a huge, huge segment across the country. The good part is a large part of it is also locals and unbranded, and therefore that journey will happen branding. So we're in the process of right now identifying plans to expand that. That's example number one. Example number two, when you said Capital Foods, right? In Capital Foods is Desi Chinese. And one of the big times which was not tapped aggressively in the past was noodles, right? Now, noodles, we were only playing in the multi-pack segment aggressively. But the bigger segments, if you look at it, is the 10 rupees and the 5 rupees.
Yes.
The 10 rupees, there is money to be made, very decent money. You have to just get in there and get this thing. And I've got a differentiated product. I will never play mainline noodles.
Yes.
Right? With chings. But there is a differentiated play to be had, and we're just about starting off expanding on that route. That's number two. Capital Foods, the other thing, I think we talked about it briefly, is the Korean craze.
Korean, yes. Can Desi Chinese also turn into Desi Korean?
Absolutely. It has got every right to enter that very simple.
Korean, gochujang and all of that is.
So you will see a range of Korean cuisine launches coming out under Ching's portfolio very shortly.
And as you increase your, adjacencies, you also expose yourself to competition from incumbents, which are fairly strong in their processes. I mean, you spoke about noodles. The market share in the market leader is fairly high. They are also, fairly aggressive when it comes to competition. Similar is the case with Rusk. In the organized space, at least, Britannia is top of the pops. They are expanding their share as well. You know Varun well. How do you compete with these guys?
So in all these categories, I am not going into the belly of the market. I'm playing a differentiated play.
But you are still eating into their incremental.
I am, but I'm not targeting a 50% share of noodles. I'm not targeting a 50% share of Rusk. I am targeting a different segment, which is profitable, niche, and I can own the segment, right? I'm not trying to discount my way and gain share out there.
Let's talk about Narishko now. Start of last year, you said it'll be 1,000 crores last year. You didn't anticipate the competition that came in. You ended about 850 crores. So it's a given that 1,000 crores happens in FY26. What's the growth path here? Because, there is strong competition. And I was reading a note that came in from Varun Beverages, which said that 59% of their volumes are actually generated from no or low sugar products. Functional beverages are doing extremely well. Are you considering entering the sports drinks? What, say, the others are doing right now?
So Mangalam, in Narishko, we've consistently maintained that we will not go up against the majors, right? We will do a differentiation.
No fizzy drinks.
So we will not get into carbonated drink. We are, I would say, in the next 15 days, you'll see a sports drink come out.
Okay, and that's a headline.
entered energy, but we didn't get it right. You're in the process of rejigging it. You will probably see a relaunch pretty quickly. You will see a slew of functional drinks. I mean, we're back on the growth path. Overall, for the last quarter, I grew 17 on volume, 10 on value. But I exited March as a 38 on volume and 26 on value.
Got it.
So there's no reason I will not grow 30% consistently here on. There's a little bit of, how do I say, recalibration which you have to do. But that, in my mind, in businesses which are fast growing in emerging markets, that is par for the course.
And electrolytes in your drinks, or what's the scene?
We're looking at that category very, very closely. I was in Chennai and Hyderabad, and I did see a plethora of offerings out there. But it's a very fragmented space, so I do think there is an opportunity to play out there.
You're also one of those who were in the same team that was responsible for inventing what? Sting, which is currently the toast of the nation when it comes to growth, etc. So, what stops you all from getting so aggressive there now?
So we do, like I said, when the base business starts to not performing, if I may put it, we got to put that right first. So we focused on that. Right now, we're back on the base business. Now you'll start seeing. So we just got into alkaline water. Alkaline as a trend is catching up. It's just availability which is an issue. And I do think we can circumvent that availability. We did a pilot in Bangalore, went off very well. So now we're going to roll it out across very, very quickly. So you will not let me say, I'm not only chasing the big spaces, I'm chasing the niche spaces in which I can carve out a differentiated, strong, profitable, long-term sustainable business.
Is anything dairy related on the cards?
No, we are not. Say, dairy, Mangalam, let me be upfront, right? Either you're in dairy or you're not in dairy. In my mind, there is nothing called value-added dairy.
No. So then how do you address the need for or the high demand for protein products in the country?
So protein is a space we know we've got to get in at some point of time, right? We did try a small trial with Perfect. I think we learned a lot. And we also learned that it's not as simple as just putting a product and getting out. We need strong science backing for that. So we've taken a step back, evaluating it, and we will come back.
I gotta ask you this thing as well. You know, when you say that you're looking to decommoditize your business, so you look at Sampan. Sampan is growing extremely fast, but a large part of their revenues again comes in from pulses. That also is a commodity. So, I mean, how do you then decommodify yourself?
No, no. So it's a mix in the portfolio, right? Like I said, Sampan and ready to drink exist for the top line at decent margins. Both. And in Sampan also, when you look at decommoditizing, I'm not playing the belly of the market. In pulses, I am not into unpolished. If I get into unpolished, I get into the vast majority. I'm still in the polished pulses. I'm at a 10% premium to the local leader in every single geography, and therefore I will make money. I built a strong backend which can predict the ups and downs of the market, including when is the sowing season, how much is sowed, what is the output, will the price go up, down. So therefore, I've started doing forwards.
Have you done that in tea as well? Because
Tea, I think I would say probably one of the 2, 3 top players in the tea business in understanding the business. Apart from having a very strong institutional knowledge, we've now moved into digital and now we're leveraging AI. AI is able to do those calculations and coupled with the institutional knowledge of the buyer, I think that is where the strength of the TCPL knowledge over the years comes in.
we just said at the start of the sowing season. What are your feelers from the ground?
For tea, I think this year March has been good. April was a bit tepid, but the expectation is May will be good. Overall, the prediction for this year is that tea will be a normal year. And if it's a normal year, then the prices will come off the highs. And therefore, my expansion on gross margin will happen on tea.
So 80 to 100 basis points over and above what you would have done had tea prices been normal, plus the additional benefit that you get from tea prices. So 70 to 20% in FY26 is possible if
I'd
tea
exit.
prices
I'd exit because remember, tea prices will come into play on a margin expansion front by, I would say, middle of Q2.
What about innovations? Because you've been fairly focused on innovations. What is the hit rate out here? I mean, what proportion of your innovations have actually, given you incredible satisfaction in terms of the business numbers, and how many of them have not done well?
I would say we've probably got a 75%, 70, 75% hit rate. but that
How do you define the hit rate? Because 75% is huge.
correct, but that is defined as we before any innovation we follow this stage gate process,
Which is what?
which is it starts with gate one, which is an idea, right? After that idea is approved at the Innovation Council, which I chair, and which everyone who matters is there on that council. So the decision is made then and there, right? Every month, 1.5 hours. Stage two is where you actually put flesh on the bones, if I may, right? Drop a tangible P&L, drop tangible targets, and say, okay, this is it. Stage three is where finally everything has come together. You actually got the manufacturing numbers and everything possible, and then you look at it. Yeah, this is the art of the possible on the top line, bottom line, and then you launch. And stage four is launch, right? And then you do a post-launch evaluation. You've got to follow through on the post-launch evaluation, and the objectives for that is X top line and X bottom line, or the noodles, right? We know it's a 8,000 crore market. And on the 8,000 crore market, I'm not going to get to a 30-40% share. Maybe it's a 5-10 share. So therefore, and I'll get to it in X amount of years. So year one, year two, year three, this is the top line, these are the margins. That's approved. And then every 3 months, we do a full-fledged this thing of where are we on the business case. If we are not hitting top line and bottom line, there has to be a strong reason for it to continue. Else we kill.
So how many products have you killed
So
over the last
let me give you an example, right? We launched something called a tea decoction, right?
Yeah.
The hypothesis was convenience, boiled tea, convenience. I mean, it looked very good, but no takers, walk away. Let me give you the example of dry fruits. I have now on a annualized run rate of 100 crores.
I remember when we spoke, it was around 30 crores, 2 to 3 crores per month.
Correct. So we launched online, proved the model, it works. Now we've got into offline, into the large organized trade. And I was in Hyderabad and Chennai, and I see it now slowly percolating. Cold press oils. I'm not going to play oils very clearly. Cold press oils is a niche, differentiated, higher end this thing, right? Right now, 70-80 crores is the run rate, only online. So now we're going offline, and guess what? The retailer is saying, yeah, I've seen it. I know there is a this thing. Why don't I sell it?
You've also gotten into coffee vending.
Yeah.
For offices. How does that fall into the overall scheme of things for you?
So this is a different channel in
Yeah.
my mind, right? Like I said, we figured out which are the channels that we are under leveraged or we need to build, right?
But how big could this even be? I mean, in your overall 17, 18,000 crore revenue that you have, how does this make sense?
So it makes sense because it helps me penetrate institutions.
Okay.
It's the foot in the door. So I've started off with vending. Now slowly we'll figure out how to expand the portfolio. Remember, vending is in offices, is in cafes, in canteens, in schools. Coffee is not the only thing that they're selling. They are also selling ready to eat. They are also selling other food products, snacks, etc., etc. So now slowly I'll expand the portfolio into that. This is my foot in the door.
So, what do you expect your Horeca and institutional channel to contribute in your overall sales, say, over the next 3 to 4 years?
Yeah. So I would say there's no reason we can't get to a, I would say 400-500 crore top line in vending in the next 3 to 5 years.
So now, business talks done. Let's talk about something that happened over the last 1 year. We lost Mr. Ratan Tata as well. I'd like you to, if you've had any meetings with him, any conversations, any work with him, if you could mull over that.
So you have to remember the whole reason for the existence of this company at this scale is Ratan Tata. Tetley was the first foreign acquisition.
Yes.
Tetley was the first leveraged foreign acquisition, and it was the first time an Indian company was buying a sizably larger multinational, right? So that was this thing. He was the chairman of this company, and therefore he's guided this company to where it is. I still remember one distinct interaction post. It was in the middle of COVID. It was December of 2020, right? And I had the fortune of sitting next to him with no one around and probably holding a conversation for 20 minutes. And we had his ability to A, remember stuff, right? And B, he was so incredibly well read on various topics. So we had this discussion of where did COVID originate from? And we went into deep detail. We moved into plant protein and what it can do from a sustainability perspective, profitability perspective, consumer trends, why it will go in a certain direction or not go in a certain direction. And then we came back to, gentlemen, now tell me, how would you build this thing? Which are the categories you would enter in, right? And though he was not actively involved in the day-to-day of the business, his facts were phenomenally accurate.
When you look at Tata advertising, it's not a Pepsi, it's not a Whirlpool, it's not aggressive in your face. This is my brand and this is what it stands for, sort of product. Are you looking to change that?
So let me put it this way. While I said 7.5 total, my growth categories, I'm spending close to 10-12%. Okay, right? So it's by category. Now, impulse categories require very high advertising, right? And staples don't. Just because impulses, you got to be top of mind, you got to be in the store, pick it up. Either you pick it up now, a soft drink or a chocolate or a
Or with these noodles, rusk and all of that you're getting, is that impulse?
yeah, but it's not impulse. It's not completely impulse. It's not like a soft drink or a chocolate or a gum impulse. It is more impulse than staples, but it's not out there. So it's somewhere in the middle. And these categories, I'm spending about 10 to 12% for advertising. A. B, you have to always remember that I've got this handicap, positive handicap of the brand name called Tata. Therefore, I need to advertise. So Sampanna, I mean, I just need to put it out there and consumers automatically pick it up, right? That's not to say that I won't advertise. Tata Salt, right? The brand has been built so strong over the years. I just need reminders, right? I don't need to have awareness creation, right? So it depends by category. Uh, Capital Foods, you will see advertising ramping up. We've just signed up. Uh, I would say one of India's biggest icons for organic India to come out and talk about organic India. You'll see that playing out.
Who's that?
You'll see that playing out Mangalam shortly. Or we're looking at another famous celebrity because you've done a whole relaunch of Tekli. People drink green tea. One of the primary reasons consumer thinks it aids weight loss. So we've added L-carnitine onto the green tea. So L-carnitine is a proven ingredient to burn fat, of course, with proper diet and exercise. And we're backing it up with a celebrity to endorse it. So it's not across the board this thing, but targeted advertising, we will ramp it up.
And final question, Sunil D'Souza, when you joined Tata Consumer to now, how far do you think you've come as a person, as a leader, and what's the next step?
Like I said, we're 45 minutes into a 2-hour movie, so we've got a long way to go still from a Tata Consumer perspective, but gives me immense satisfaction because I still remember chairman's this thing saying, I've got the most trusted brand name in the country and I've got every reason to succeed in consumer. I don't count when the FMCG companies are layered on. I think we've changed that, right? Whether it's the number of brokerages who cover us today, whether it is the fact that I think bar one small this thing, most of them are hold or buy. And hold is not because of business, it is just saying valuation perspective.
What do you think? Is it a whole
Sector? Sorry?
What do you think? Is it a whole?
For me, it's a buy. Right? So, yeah, so having come, more importantly, when you walk out into the trade, right, and uh, the trade is positively predisposed towards you, or the fact that when my sales guys used to go 5 years back looking for a distributor, it was a challenge because you guys are not serious in this business. But today, when you walk in and you want to look for a distributor, or look at my team that I built, these are people with, I mean, star-studded pedigrees, right, and who can deliver. I would dare say we're the team to beat right now, and that makes me proud.
What could have been better?
Uh, I mean, anything and everything could be better, but I think we've come a long way.
Take that point. Thank you so much, Sunil. Always a pleasure speaking with you.